For that, I'd like to welcome the chair and moderator of the panel, Jens Siebert from KPMG Germany, onto the stage. I think we are seven people, so let me give you that mic as well. And he will be joined by Kurt Zeimers from BNP Paribas, Simon Seiter from Hauck Aufhäuser Lampe, Benjamin Duwe from BNY Mellon, Dr. Annika Patz from YPOG, Jonathan Lessmann from Swiat, and Max Heinzle from 21 Finance. Enjoy.
Perfect. Hello, everyone, and welcome to the panel on the DLT pilot regime. We're getting ready with strings. That's good. My name is Jens Siebert. I'm a partner at KPMG and happy to moderate today's panel. We are a big round, so let's not lose too much time in the beginning. Maybe before we dive into the topic, we already heard a bit about the DLT pilot regime. It's a new piece of European regulation that will provide a regulatory framework for the issuance, trading, settlement, and custody of financial instruments, namely securities that are issued on distributed ledger technology. And yeah, I'm really glad to have a huge round of experts from the industry to discuss this exciting topic and also the impact on, or the possible impact on the European capital market infrastructure. So in order to kick it off, let's introduce ourselves quickly. Maybe Max, you can start and then we go all the way down.
Thank you, Jens. Excuse me. My name is Max Heinzle. I'm founder and CEO of 21st Finance. We are headquartered in Liechtenstein, so if you so want, a Liechtenstein fintech, and I'm the CEO and founder of it.
Simon Seiter, I'm head of digital assets at Hauck Aufhäuser Lampe, was previously in the same role at Deutsche Börse AG, and before that at Commerzbank, where we work together, basically.
Yeah, actually, yeah. So Benjamin Duwe, I work for BNY Mellon in a global team looking at digital assets across different business lines. Also former Commerzbank, so great to see a colleague, former one.
Yeah, hi, I'm Annika Patz. I'm working for a law firm called YPOG, if you were wondering, YPOG. I'm part of the banking team and financial services team, and we provide everything around crypto services, made one of the first crypto custody licenses in Germany, and also part of the Bitkom Arbeitskreis Blockchain, and now part of the Vorstand as well.
Yeah, thank you. I'm Jonathan Lessmann. I'm Chief Marketing Officer and Head of Platform Strategy at Swiat. That is a software development company for DLT-based infrastructure and network. And we have been established in February and are based here in Frankfurt. And our main goal is developing infrastructure for regulated financial entities.
Yeah, my name is Kurt Zeimers. I'm working for BNP Paribas in Frankfurt in the business line Securities Services, and I'm responsible for the product management of the client segment asset managers. And I'm part of a global digital asset team looking to develop solutions for the asset servicing of digital assets, such as digital asset custody or the tokenization of fund shares and bonds.
Amazing. Thanks a lot to all of you. Maybe to dive into the topic, Annika, I would like to ask you, we have heard a lot about the pilot regime already during the day, but maybe you can give us, once again, a quick introduction for everybody just joining the live stream. What is the pilot regime and why is it important?
Yeah, sure. So the DLT pilot regime is, so to say, it's one of the first European sandboxes for financial services regulation and now for DLT-based market infrastructures. When I say market infrastructures, I mean DLT multilateral trading facilities, so DLT MTFs, and settlement systems for then digital securities and financial instruments based on DLT, so blockchain technology, distributed ledger technology. What's new in this kind of sandbox means we can now try some new things, try some new infrastructures, and maybe also new setups that we haven't seen until today in the normal regulation of exchanges and settlement systems. We now have possibilities to have the trading and the settlement within one entity, which would be a third type of market infrastructure, the DLT TSS. It's a trading and settlement system. So this is the basic for the the pilot regime. And then what's new, I can apply for exemptions from the regular MiFID and CSDR environment. So I can now have also retail customers on my exchange, which is quite new. And also they can have accounts with a CSD or a TSS and SS. And yeah, this is basically what the pilot regime is about.
Perfect. We have heard new licenses, possible new opportunities coming with the pilot regime. Simon, we all know you always have a good overview of the German market, and what market sentiment do you see at the moment around the pilot regime? I mean, it only turns effective in March next year, but what are the rumors in the market?
So I think the German market was not the most active one. I think Kurt can add here later on maybe from the French side regarding the pilot regime, because we have the EWPG in place, the Act on German Crypto Securities basically. So they enable already MiFID instruments being traded on a public blockchain. However, of course, we do not have the capability to multilaterally trade these assets because of CSDR. So whatever the German regulator and the jurisdiction wants, they cannot do it because the European side says if it's multilaterally traded, you have to put it into a CSD currently. And now comes the extension of the pilot regime, as Annika has completely rightfully pointed out. And here I think, to be honest, the market is not there in terms of development yet to some extent. So we see, of course, that there's interest in the pilot regime. But however, people are yet quite going on the issuance side without yet taking into account the trading to a large extent. This is my personal perspective that I have from the market. So I think with more and more instruments being issued, there will be higher demand for making them tradable and also multilaterally tradable. And then maybe the pilot regime comes into effect where you actually also enable the trading within one system also from the settlement side.
Great. I think it's always a bit this chicken-egg problem, right? Is there first the issuance or the market infrastructure, and who's really willing to build the rails if there's not necessarily liquidity and issuance in a market that yet has to evolve and establish itself? But maybe you mentioned already a broader European perspective. Kurt, can you add anything from the French market and from a wider European perspective on how the pilot regime is seen there?
Yeah, we can see another dynamic on the French market. So there are associations such as the French Association of Professionals in the Security Services market, but as well Paris Europlace, which is a kind of association to foster the marketplace in France. They are regrouping market participants, so Banque de France, the central bank of France, CSDs, asset managers, security services players, but as well fintechs, and they are building working groups. So they want to make the French market collaborate on these initiatives and take advantage of the possibilities to test this kind of new market infrastructure in the sandbox. So it's the first sandbox we have at European level, which was provided. So the French market sees a chance to really test this kind of new innovation things. And what I miss here in Germany is that we don't see any or not much collaboration but among market participants. So everybody is doing maybe something on its own, issuing a kind of crypto securities, being a licensed registrar. But in the French market, we have seen already since 2 or 3 years a collaboration among market participants. There was the 9 experiments of Banque de France, which have collected different market participants around specific use cases. So we have participated in 2 experiments where we have issued a tokenized bond on a market infrastructure, and Banque de France has issued a wholesale CBDC to settle this bond. So the entire market could already test how corporate actions can be settled with wholesale CBDC and so on. So as maybe the German Bundesbank is more hesitant and not looking after such wholesale CBDC solutions, but focusing more on the trigger solution, there's another dynamic on the German market from a central bank perspective, but even the IMF, so the French equivalent of the BaFin, is engaging with the industry, is answering questions how the industry can participate in the pilot regime. And I can't see yet any public information from Ministry of Finance or BaFin on this topic in Germany.
Yeah, thanks, Kurt. Yeah, I think really collaboration is a word that we will pick up later during that panel, and seeing, the challenges of really working together as an industry to set up a new market infrastructure, possibly be built on distributed ledger technology. But hearing France is doing kind of a good job on that side. It's not that in Germany is nothing happening. Max, you just announced recently that you want to set up one of the first trading and settlement systems under the DLT pilot regime. What has been the rationality to take that step? You're kind of a front runner, I would say.
Not only announced, but also we are already developing. And well, in essence, it's critical market infrastructure that is needed. When we are looking from our perspective with the services, also with what Simon said earlier, we see a lot of issuances taking place. The topic of secondary market has not been, addressed or solved yet to an extent where we can, actually bring together in a trading venue the respective parties and actually see a flourishing token economy. And I think that's also part of why this has not happened yet, right? So for us, nevertheless, that it is a sandbox, and keeping in mind that there are certain thresholds, for us, this is the perfect step. For us, this is a big revolution actually happening in capital markets. Yeah, and we want to lead that way, and we want to be a pioneer in this space. Yeah.
Thanks. I mean, maybe Ben, we have heard a bit about the development in France. First players in the German market moving into the pilot regime. I mean, we also have like volume caps and other topics coming with the pilot regime. You're representing one of the biggest or the biggest global asset servicing and custodian in the world. And what is the perspective of BNY Mellon and such big players on the pilot regime, and also taking it into a global context, maybe?
Yeah, just to give some scale aspects, 20% of all global capital market flows each day somehow touch BNY Mellon. So from our perspective, we are truly a facilitator of global capital flow and global capital markets. And we are a bank of banks, so we have no direct retail connectivity in most markets. We don't compete with other banks. So for us, it's really about how can we help move the partly decades-old capital market infrastructure onto the new rails into the future. From that perspective, there are two components, right? We have federated bank in Europe. We have many different headquarters. We're not in one country or the other, so we have a European view. So looking at the pilot regime and the intent behind it to create a more level playing field and enable a more integrated European capital market is something we can truly subscribe to. As a DLT enthusiast and part of a digital assets team, I'm also highly appreciative of the underlying technology and the opportunity the pilot regime would offer to develop integrated technological solutions, right? Really battle tested in a regulatory environment. But I think the true problem for us and many of the other bigger players in the market is if you look at the caps, so who can issue, how much you can put in a system, the limits can be reached within days, for example, or the majority of our clients cannot be served, right? So the question is, where do I go with this, right? Do I try to use the technology in a regulatory compliant manner outside of the pilot regime to build truly scalable solutions? Because the talk in the industry is we don't want island solutions. We do not like liquidity pools being separated, right? And I always talk as a bank of banks, right? And I think with some of you already had the discussion yesterday, right? As a bank of banks, right, clients don't want to reduce liquidity pools. They want to be able to move custodians. They don't want lock-in effects into one solution and all of those topics. So it's very difficult to use the pilot regime to, from the current view on it, to truly change how global capital markets on European capital markets work due to the size limits, right? And I think that's one of the fundamental discussions we had before. So the intent is good. There's opportunity to build integrated solutions. And you can see that, for example, in the UK, there seems to be more flexibility on the limits, right? It's not open, but there seems to be more flexibility. As a global player who's entrusted with things like clearing of US treasuries, we would have hoped, of course, to be able, because of that trust and the position we take, to maybe have more flexibility on those limits depending on what you do today, right? And I think that's a little bit a missed opportunity in that. On the other hand, talking here during the yesterday evening, I see the enthusiasm of all the individual players who maybe in a more retail-focused manner experiment with the technologies and build logics, business logics, but also develop talent and technology which can be truly useful for all of us down the road. So I think at least that part seems to be very interesting, right? So I think it's a mixed bag for us, but difficult to see how we can use it in a scalable manner for the business purposes we usually target.
Yeah, thanks. I guess really the challenge of, we hear collaboration from your side, Kurt, and also your concerns on market fragmentation that might come with new technology, distributed ledger, really entering into the capital market ecosystem. I think this is really a topic we all as an industry have to look for. And yeah, I think seeing the opportunities, but also the risks that come with it have to be carefully considered. But talking about market infrastructure, Jonathan, maybe you representing Swire software provider that want to provide, like I hope I phrase it correctly, a market infrastructure, DLT market infrastructure for regulated banks and players in the market. I guess trading becoming possible in DLT financial instruments, settlement becoming possible. You should like the pilot regime, right? What is your opinion here?
Yeah, definitely. So we appreciate the pilot regime. It's definitely it's going to be an enabler for our solution, because what we have seen in the past prior developing Swire as a network for regulated entities to connect them directly with each other and to make post-trading infrastructure more efficient, we realized, okay, we are creating these islands, right? Because everyone had their own use case and they wanted to push their use case, but ultimately financial markets are holistic and are not single use case driven. And this is why we went down to the road, say, okay, we're building a network from banks for banks to connect them, or regulated entities in general, so that we can overcome the collaboration paradoxon that we have seen in the market that has been described already in 2021 by the World Economic Forum report, that the entities are not willing to truly cooperate because you have to distinguish between dominating the other counterpart, not only on the use case side and infrastructure side. So our approach is to offer software so that the regulated entities can create their own network and can jointly operate on a joint network while staying in competition on the business side. And therefore we see our role as the software provider for such an infrastructure, for such a market, so that the banks are brought into the position to exploit and to experience the DLT pilot regime.
All right, a lot of valuable insight on the pilot regime, but maybe to really open the discussion a bit, I want to give a statement I've heard many times around the pilot regime: too little, too late. Is it really, I mean, we have heard the volume caps maybe also for the audience. DLT market infrastructure is capped at 6 billion assets under trading or settlement, however you want to call it. And 6 billion can be reached quite quickly. At the same time, we also have that retail client access to the pilot regime that allows retail clients to directly access the multilateral trading facility and the settlement system. So also new opportunities at the client interface. But is it too little and too late? Is it closing down the market for the next 6 years? And really, yeah, is it helping innovation or is it stopping innovation?
So I take this point because I think I said that.
It's not just only you.
No, but fair point, Jens. But I would say definitely too little, too late, in my opinion, for large capital market players. Yeah, for investment platforms, perfectly fine for investment platforms. But for really large capital market players, it's too little, too late, and especially too long. Yeah. So I don't like the pilot regime in terms of being a pilot regime. I would like to have a regime and not a pilot regime. And I hate sandboxes. Yeah? What you build in the sandbox works in the sandbox, but not in the real world. If you have to build it for the real world, it works differently than in the sandbox.
And you don't know how you continue, right? I think we don't know yet what happens at the end, and I think that's one of my fears. If you create an ecosystem of a lot of players who have a nice integrated platform, and then suddenly at the end, to maybe protect some of the players out there who might have not used the opportunities, you suddenly impose high regulatory burdens to continue to operate in that environment, right? And then suddenly the cost of doing business, and I think also from a legal perspective, what you have to fulfill regulatory constraints, they could be so high that then it kills off the innovation you flourished for 6 years for the same reason and because of some of the same underlying structures that enabled the pilot regime to be so, or made the pilot regime so restricted in the first place, right? So I think there's could be a big cliff at the end. People completely underestimate when looking at what this means. So it fosters innovation, which is great and highly appreciated, but it could then in the end become very restrictive, and restrictive I mean highly regulated, which we all appreciate, but then expensive. So, and I think that's to operate, right? And then you might not have the scale yet, or you might have addressed a too small market size to be able to cope with those costs. So that's one. And the other thing is, who knows? And I think that's another thing. If you then are big enough, maybe you take new regulated roles, or you see certain players, if you look at for example, the German infrastructure, where they then look out of the current regulated environment, how to take advantage of the technology, and then they have 6 years to do so because they're protected in that role, right? So I think it's very difficult to see what works.
Good.
But I agree with you, Ben and Simon. Market caps are too small. We don't know what happens after 3 years and 6 years, but that's the way Europe is working. So same business, same risks, same rules. If we don't participate to the pilot regime, we will never ever have a change of the CSDR Article 3, which says that you have to put every DLT financial instrument which is traded at the stock exchange in the book entry form at the CSD. So I think this is a way of being able to work on sandbox test case use cases to demonstrate to the European Commission that with certain limits we can do some trading activity, settlement activity, but there needs to be further changes. And I think there's a regular review by ESMA as well, which is planned. And if market participants realize that there are some shortfalls or shortcomings in the regime, they are as well willing to listen to the industry and then to adapt the pilot regime. It's not because it's now written like this that it's always in the next 6 years like this, and after 6 years we will discover how it didn't work. So I think we need to engage with the European Commission on those topics and just let's do it and not waiting and blaming about it.
But the industry wasn't silent before, just to be clear, right? I mean, you as well as others, we all, and maybe you can attest to it, we all said in these forums where as the industry we gave a feedback, there's a problem with cap, and we still have them. So I'm not as optimistic that in 3 years everything will be lifted, right? Or it will be big, but maybe you have a different perspective there.
Yeah, I mean, we always said thresholds are too small for the kind of business to really make it to kind of now set in stone, this is how we will regulate our markets in the next years, and not the same as we do now. But I would still say we have to try, and so to say, after this will finish, if it will finish, we are still regulated. So the pilot regime is not a sandbox in a way you can dig up your regulation as you want. So you still have a quite heavy regime, I would say, also for new market participants. And I think you still have a type of CSD, which is now an SS. So it's not as we had it before, we have an MTF that can do everything without being a CSD in the end, but still now we have this. So I think the regime has some exemptions, but they're very limited from what we have today. And I think thresholds, big problem, but this is engage with the industry and the regulator and see we have a sound system here, we can have a proper system, and then they might get higher and higher. So
maybe last statement from Jonathan before we move forward.
Yeah, definitely. I think we have to, for the statement too little, too late, we have to consider the intent of the DLT pilot regime. And from my perspective, and what I've heard as well in this round already, is the word quite often sandbox, sandbox, sandbox. And I think I can't complain about the situation that a sandbox does not give me the same scale like I want to have in my industry, right? Therefore, it is a sandbox to explore. And I really appreciate the approach taken by the European Commission there, because it's kind of an iterative approach, like we have seen as well in Germany with the German Electronic Securities Act, with the possibility to expand it further and further if there is some proof, right? And I think now it's the time to put some proof to it and to show that we are capable of using this, that we have the advantages that have been proclaimed for a few years now already. And therefore, I think it's not too little, too late. It's exactly right. And if it stays like this, then it's too little.
Maybe just to add one thing to the round, also asking a question, because I'm not a legal expert, but where in the world do we see such a form of legal framework that has this disruptive potential to disintermediate the level in the level of the DLT pilot regime, allowing for atomic matching and settlement? Maybe somebody can answer that question. I think often what we do, also here, Germany, or elsewhere, is we are picking out the issues, we are addressing the points. This is also why we have the discussion. But what we need to do is we need to embrace and see what the potential is, and how disruptive the step from a regulatory point really is. And anybody that takes a look at the DLT pilot regime and takes a look at, what the functionalities are that are encompassed in the DLT TSS will come to understand exactly that, I think.
Perfect transition to possible industry implications by the pilot regime. I think maybe to just add to your question, Switzerland is having a comparable legal framework, but it's not the European Union. And in terms of market size, I think we have to really put it into perspective, right? But possible implications. Looking into the regulation, I mean, you see that from the issuance to trading, settlement, and custody, as a trading and settlement system under the DLT pilot regime, you're allowed to kind of cover the entire value chain of the capital market, right? So what will be future-proof business models within the pilot regime, and what is also, I mean, what is the role of a custodian, for example, if the issuer and trading and settlement facility can also provide the custody function? So will we see new roles in the future digital capital market that is DLT-based?
From our perspective, institutional investors will always use a custodian, because we need to see this pilot regime is about DLT financial instruments issued in the DLT market infrastructure, but we will still have the traditional world, and it will still exist in the next 10 to 20 years. So we need to be able to serve our clients, regardless if it's a digital asset or a traditional asset. They want to invest their money, and we as custodian will act as custodian for both the traditional assets and the digital assets, and make sure that those assets are kept safely and reported as well in our legacy systems, in our online reporting tools and so on. So that's for the institutional investor, they even don't care if it's a digital asset or a tokenized bond or a traditional bond.
But then I ask you another question. You have an underlying technology, you have a tech vendor who provides you API access right, to whatever you want to do. It's fully digital. You have nice, and I see one of our AI colleagues sitting there, some very nice AI technology which solves, and machine learning, which solves most of the problems you today have. Do you need an intermediary, right? So I think the question for us is a different one. The question for us is, how does the overall capital market infrastructure work? What is a benefit to the client? So you have to say it from the client. What's a benefit from the client in that value chain or not? And what does the client want or not? And I think that's a little bit my discussion I've been having over the last half a year or year. There are a lot of, and again, talking to other banks, right? So all the opportunities are great, and we have seen a lot, but then I have an asset I can't use in my tri-party repo system, or I can't do SEC lending on that asset. It's great that it's a little bit more efficient. That maybe saves me a very tiny margin, but over the life cycle of a bond, for example, I lose a lot of yield and upside I have of that asset using it in other systems. So I think just going away from that one role, I think it's more an ecosystem play. The ecosystem in its entirety has to, in a evolutionary manner, move together towards those new structures, because otherwise you fragmentize market, nobody likes that. You fragmentize liquidity pools, nobody likes that. And then you have that grease of the system of SEC lending, of you know, all of those topics, tri-party, all of those topics which are essential functions in a financial systems, not connected to those systems anymore. So for us, it's more a how can we help together with our partners in the industry and the regulator to create the client experience our clients want and solve for the true problems we have, right? Decades-old systems which with a lot of different recon topics. I mean, I just imagine how many people sit in our bank just doing recon, which with a shared truth, you could already reduce.
But maybe to add, Ben, I think what we see, and we have seen that already in transactions prior to the pilot regime, is that you do disintermediation. I mean, we did that at Commerzbank in 2018, basically, with us making us obsolete as a market maker even. And then you see that the bank, the intermediary, or whomever, is still doing jobs that are not being done if the party is removed. And that is, for example, simply something like pricing for debt instruments. Yeah, or the KYC of the investors for the issuer. And then the issuer came to us and said like, okay, now we have issued this thing on our own and we are privately placing it on our own as well, but how much should the people pay us? Because they do not do the pricing yet. And these are jobs that still need to be done, and these are basically services. So I think it will lead to fragmentation into more service-oriented approaches, where the current market providers will maybe in some way specialize more into specific services and provide them in a more efficient way. That's the optimistic perspective of the future.
Yeah, I would really love to continue this discussion on how the pilot regime can possibly provide the regulatory foundation for really setting up a new efficient market infrastructure that is based on distributed ledgers. But I think we are really also, in terms of time, coming to an end of this panel. But maybe as a closing statement from all of you, looking five years forward, what is your perspective on the European capital market, and especially on the usage of distributed ledger technology? Maybe just a quick statement by each of you, and then we are closing the round.
We are going to see an up-and-running trading venue, a multilateral trading facility, or DLT-TSS, trading and settlement system, with a lot of security or DLT financial instruments being listed and traded.
I hope that we'll see 40% of capital markets being put on distributed ledger.
I don't do the time thing anymore. It always backfires, right? And those things are taped.
5 years, we have some time left.
Yeah, okay. But I think that within those 5 years, we see first scalable applications of DLT technology also outside of the pilot regime, truly starting the evolution of capital markets towards a more DLT-based infrastructures, or global infrastructure as well.
Yeah, maybe in 5 years, let's say, it might be a new normal, I don't know. but also seeing that ESMA has bilateral platforms that are now qualified as MTFs or will be qualified as MTFs. I think for retail markets, it will be the structure to use and to be. So, but then let's see.
I guess DLT-based financial instruments will be standard. I guess that they will be broadly accepted and that the vast majority of new issuances will be in digital form. And that we are working on and would still be or have improved already the interoperability of liquidity pools, as you said it, because we have now the opportunity to set up on a new technology where we can overcome this collaboration paradoxon now and have true scalability on DLT.
Yeah, I think we will see more and more tokenized assets, such as tokenization of fund shares to accelerate the fund distribution, and tokenized bonds to use another way of securitizing project financing, for example. So tokenization of assets will be definitely in the next 5 years accelerate.
Great. Thank you so much to all of you, and yeah, thanks to the audience, and yeah, I think some really good insights on the pilot regime, and yeah, let's see what the future brings on digital markets.